All right, folks, this housing crash in Florida is getting real. I'm about to show you some listings where the values are down 30 to 40%. Literally, the sellers have had to do 30% price cuts. These houses are still sitting on the market. They're actually now back to the same value they were at in 2018, 2019, before the pandemic hit. That's how much values are now going down in Florida on certain listings. And these declines in prices are almost hard to fathom, as just a year or two ago, everyone was saying the Florida housing market was just going to keep going up forever. They were saying that it was never going to crash, but now the data is coming in and the data is severe. For instance, on this listing right behind me here in Punta Gorda, Florida, the seller has cut the price from $525,000 down to $360,000 over the last 9 months. You can see here that the Zillow value estimate of this house has collapsed by 35% and is now back to where it was in 2019, erasing all the pandemic appreciation. Meanwhile, the house next door was just also listed on the market, and you can see the value estimate on this one is down by 18% over the last 2 years as well, and it's now listed for only $65,000 more than what it sold for in 2006. And ultimately, this is good news for you guys as buyers out there. This housing downturn here in Florida, it's happening, it's getting real, which means we're getting closer to the point in time when it will be time to buy. However, we're not there yet. Prices overall are still overvalued across much of Florida, 28% overvalued across the state. And here, even in Punta Gorda, prices are still 20 to 22% overvalued. Now, folks, I'm going to take you to another listing in a couple minutes. It has an even bigger price cut than the one I just showed you, so you could see how much the values are actually going down here. This listing is actually from an investor that I'm about to show you. But first, I want to talk about a question I think is probably on a lot of your minds. I suspect a lot of you are asking yourselves this question. Okay, Nick, I see the price reductions you're showing me, but in my area, I'm not seeing the same reductions in prices. Maybe you're in another part of Florida, maybe you're in Tennessee, maybe you're in Texas, maybe you're in California. Well, then when is this downturn? When are these price reductions going to come to my area? Well, folks, to answer that question, it really depends on the inventory levels. You know, the reason that prices here in Punta Gorda are going down so much, this is located on the southwest side of Florida, about an hour and a half south of St. Petersburg, is because of the inventory. Homes for sale has more than doubled over the last year, and we now have a level of active listings that is even 60% higher than it was before the pandemic. So if you want to understand, is this going to happen in my area? Are we on the doorstep of these big declines? Look at those inventory levels. But another thing that influences how much prices are going to go down is who is selling. And the reason prices are dropping here in Punta Gorda, in addition to the higher inventory, is because the people selling are those seniors who are strapped for cash, as well as real estate investors. These two entities tend to be more willing to reduce the price to sell. In the former case, it's due to needing cash, needing to sell, not being able to afford to live there. In the latter case, investors just tend to want to get rid of the property when they don't want it anymore. Like this listing right behind me. This is owned by a big Wall Street real estate investor who bought it in May 2022 for $445,000, and now this house is listed on the market for sale for around $330,000. So they've cut the price here about $110,000, $120,000 below what they bought it for, this Wall Street investor. And as I talk to more people in the industry who know these Wall Street investors, they say that once a market kind of gets on the blacklist, like Punta Gorda's on the blacklist, Austin's on the blacklist, Phoenix is on the blacklist for these investors. Once it's on the blacklist, these investors just will sell out and they'll cut the price to whatever they need to cut it to sell it. And so we're just seeing more and more of these listings, individual listings, where the owners have cut the price a lot, and where the values are now back to what they were at the start of the pandemic or before the pandemic. But interestingly, when you look at the home value data on Reventure app, you can see that the values in aggregate are only down by a couple percent. Here in Punta Gorda, prices are down about 6% from peak. You can see year over year in markets like Cape Coral and Tampa, prices are only down a couple percent. And so that actually confused me a little bit at first. I suspect it might confuse some of you out there too. How can we be finding these listings with such big price reductions, yet the overall market statistics say we're only down 5%?
The reason for that, everyone, is that there's a lag inherent in the market statistics that you can find on Reventure app reported by companies like Zillow. You know, these companies do a good job at putting the data together, but they adjust the data seasonally and they smooth it out to take out volatility. And so it might still be another 6 months or a year before you see some of these anecdotal indicators really get reflected in the market statistics, which is why I think you guys should be looking right now at houses. Even though the prices are still too high overall, you are starting to see individual listings in many markets get cut to a price that's pretty, let's just call it affordable compared to what it was a year or two ago. And so, you know, if you're paying attention in your market, you might be able to find one of those listings. Like for instance, in Texas right now. I know there's a lot of listings in Texas in cities like Austin and Dallas where the sellers have done huge price cuts and where we are approaching 2020 valuations. And for some of you, that might be enough to entice you to buy. For other people, it's not. Because the one thing you got to understand is that if you buy in this market, even on a listing where there's been a big price cut, you're likely to face further declines into the future. Because we are still at the start of this housing downturn, everyone. We're still only in year 2, closing on year 2. We still got year 3, year 4 to go. I don't think we're going to see a bottom for at least another year or 2. And one reason why I think prices are going to keep dropping in many markets is because the buyer demand is still so low, everyone. And this is the amazing thing, is the fact that the mortgage rates have gone down now from 7.5 to 6.5%. The mortgage rates are lower than they were a year ago by about 90 basis points. Yet the buyer demand continues to go down. And I saw a really interesting headline on, I think it was Market Watch, maybe, who had this article. They talked about how the mortgage rates are dropping, the lowest they've been in a year, but the home buyer demand is now the lowest it's been in 6 months. The mortgage application index just registered a 130 here closing out August. That's the lowest it's been since February. So the mortgage apps are still plummeting, even though mortgage rates are going down. And this really puts mid-September in the crosshairs here of the Fed rate cut. Because lots of people are waiting for that Fed rate cut and thinking it's going to save the day. But thus far, there is no evidence that lower mortgage rates is enticing buyers back into the market. And so when the Fed cuts those rates, you know, that rate cut's already pretty much priced in. And I think after that happens, we're going to see a lot of sellers start to freak out a little bit. Because a lot of these sellers holding on to this record mountain of equity, you know, they're still being stubborn in many cases. Maybe in most cases, sellers are still being stubborn, asking a really high price, thinking somehow that the market's going to get better in the future. But I think after the Fed cuts rates and it becomes obvious that the buyer demand doesn't increase, that'll be the point in time where a lot of these sellers start getting with reality and giving up some of their equity to you as a buyer. But folks, one thing I want to do right now is actually something that I have not done in a while, and that's something called a rapid fire round. And a rapid fire round is when I do analysis of 10 different housing markets in rapid succession. And I tell you about what I think is going on in those markets and if you should buy now or you should wait and how much prices are dropping. So let's do that right now. We're going to do a rapid fire round. I haven't done this in like 6 months. So let's get into it. I'm going to start with Dallas, Texas. Dallas is a market I know a lot of you are in. Inventory has absolutely exploded, 50% year over year, with the highest level of listings in the Dallas metro that we've seen in the last 7 years. The price cuts are surging. Dallas is a market I feel very confident in saying prices are going to continue to drop the next 6 months. So you have time as a buyer. But look out right now, you might even find some listings where the values have already gone down by a lot. Next to Dallas is Austin, Texas. Austin, obviously, as many of you know, is the #1 crash market in America. But what I think is really interesting is Austin has now seen prices go down so much that the market has gone from being 50% overvalued 2 years ago to only 14% overvalued today. So Austin, I predict, is going to be the first market I give a buy signal on, likely in the next 6 to 12 months. I will be giving a buy signal on Austin. Prices there still need to drop by more, another 10 to 15%, but that's coming down the pike in the next 6 to 12 months. I think Austin's going to turn into a buyer's market. But now we got to talk about California, everyone. Los Angeles and San Diego in Southern California, throw in Orange County into this analysis as well. We're still seeing tight inventory levels down in Southern California. Prices here are still going up year over year, and there's still a shortage of homes. However, inventory has improved in Southern California over the last 3 to 4 months, and we're seeing a deceleration in price growth. So don't be surprised if prices in Southern California actually dip into negative territory again later this year. However, we're still a long way off from SoCal being affordable. Shifting on over to New York City, everyone. Home prices in Manhattan are actually down 22% over the last 2 years. Manhattan, New York County, has gone down more than any other county in America the last 2 years, even more than Austin. So prices in Manhattan are getting more affordable, still very expensive. On the contrary, out in the suburbs in Long Island and Westchester and Northern Jersey, prices are still going up and there's still a shortage of inventory. That's 4, I got 6 more, stick with me. Boston. Boston might be one of the tightest, strongest housing markets in America right now. The typical value of a home in Boston is up over $700,000, and inventory is still at rock bottom levels. Whether you go to the northern suburbs up to New Hampshire or down towards Rhode Island, it's still hard to buy a house in Boston. I think prices are still gonna go up over the next 3 to 6 months. Tennessee, everyone. Tennessee is a market that is on the verge of a pretty big downturn, in my opinion. You can see the inventory and the price cuts in Tennessee have spiked, and particularly in markets like Nashville and Memphis, we're seeing a correction start to play out. Meanwhile, in eastern Tennessee, Knoxville to Johnson City, prices there are more stable. By the way, folks, it's kind of amazing that they're still building new homes down here in Punta Gorda. I don't know if you guys have noticed that there's a bunch of new homes that I've walked by here. Inventory, Punta Gorda, it's the highest it's been in a decade. Prices are crashing, yet the builders still have some homes in the pipeline. I mean, this is gonna be a big downturn here in Punta Gorda and the rest of Southwest Florida if things continue like they are right now. Speaking of Southwest Florida, Naples, everyone. I know a lot of you are interested in Naples. It's also a heavy retirement destination. The prices there are very expensive. The typical value of a house in Naples is over $600,000. We got California prices in Naples. However, they are starting to go down. Median list prices in Naples are down 10% year over year. The Zillow Home Value Index there is starting to correct. Inventory is rising. I expect those trends to continue. How about Atlanta, everyone? Atlanta is a market that still is pretty tight at the metro level. Inventory is rising, but still slightly below the long-term average. However, there's big differences depending on where you go in Atlanta. The northern suburbs are still seeing appreciation. However, south of the city in the downtown area and some of the more low-income locations dominated by investors, prices are dropping. How about Phoenix, everyone? We've only got 2 left after Phoenix, so stick with me. In Phoenix, we're seeing inventory spike year over year. We're seeing price cuts continue to rise, and values are starting to tilt back down. Phoenix is a market that shares a lot of similar characteristics to Florida in terms of how it's influenced by investors, in terms of how it's influenced by snowbirds and elderly population coming and buying second homes. So don't be surprised if prices in Phoenix correct by 5 to 10% over the next 6 months. Hi. Hey, puppy. It looks pretty energetic, huh?
She's very nice.
I have a quick question. So I was just looking at that house over there on Zillow.
Which one? This one?
No, that one.
The peach one?
Peach one.
Yes.
And they've cut the price on that house a ridiculous amount. What's going on there?
They've been gone for a while. I think they may be desperate to sell it because they left, it's a year ago now at this point. They just like packed up overnight and disappeared. I don't know.
So that house is actually owned by a Wall Street investor. So it must have been, it was a renter who was there before.
Yeah, I don't know. I don't think there was anything wrong with it. They just left a while ago, and there's been like 2 people that came and looked at it, so maybe it's because of their lack of action. I don't know, but the last people that came stood in the driveway and stared at the roof and made a lot of like...
Maybe something's wrong with the roof?
Could be. I don't know. I won't say nosy.
All right.
All right. All I know.
Yeah, have a good one. But now, we got to talk about Phoenix's little brother, Las Vegas. Las Vegas is a market that is defying the odds, everyone. While inventory is rising in most markets, inventory in Vegas is actually down by about 20% year over year. There's a continual shortage of listings in Vegas, which has continued to cause bidding wars and prices to go back up. Ultimately, I actually can't even explain to you what's happening in Vegas's housing market. It doesn't make a whole lot of sense why listings and inventory is still so low. I know people in Vegas like to say it's all the people from California moving in, but understand that In all these other cities I talked about, like Austin and Phoenix, there were just as many people from California moving in. I think rather in Vegas, the market here is influenced by a shortage of listings and people not wanting to sell. I think at some point we are going to see inventory go up in Vegas and prices drop, but probably not in the next 3 or 4 months. And finally, everyone, the last market on my rapid fire round, Miami. Miami, where home prices are 34% overvalued, prices have started to drop in terms of median list prices going down, but values are still way too high. You look at listings in Miami, if you want to buy a normal starter home, you're gonna have to pay 600, 700, 800, maybe even 800,000 price points, which are way too expensive for the local to afford. Track that inventory data in Miami, particularly Broward County. Broward County seems to be softening the fastest, along with Palm Beach. Miami-Dade is coming up behind those two. And the great thing, everyone, is that all of this data is available for you to check out for yourself. So if I didn't cover your market in the rapid fire round, you could go to Reventure app, www.reventure.app, and look at the inventory and home value data for free. Everyone, I don't know if you know this, but you can actually look at the inventory data in your zip code for free. So go there right now and do that, and then consider signing up for a premium plan for $39 a month so you can gain access to the overvaluation rate, the inventory surplus, and my home price forecast score for your zip code.